Right. Welcome. Welcome to this episode of Questions That Entrepreneurs Ask. This is an opportunity for me to pick a couple of questions off of Quora that were either asked directly to me or questions that I thought were interesting. Everybody knows if you're an entrepreneur, that can be a lonely place. It can be tough to get some good advice. And so I usually take a couple minutes, pick off a couple questions, and try to see if I can't provide some knowledge or some information based on all my years of experience of working with entrepreneurs and trying to help them solve their problems. So let's get started with a question. Let's see here. What have I got? How long would you wait before expanding your business? This is kind of a neat question. Given that I work with entrepreneurs who are, if they've never been punched in the face because they've never made a mistake, then every entrepreneur I meet is very eager to grow, very excited to grow, and always looking for kind of the next thing that's going to propel them to the next level. Contrast that with the entrepreneurs that I get a chance to work with who have been punched in the face, who have had their share of mistakes or battle scars. And they are always very reluctant to grow because it tends to be growth that put them in kind of the position to get punched in the face, if you will. But when you ask the question, how long would you wait before expanding your business? The right answer is when your business can afford it. And how do you know that your business can afford it? It would mean that first of all, you know how your business makes money, how it actually makes money. So you could look at your profit and loss statement. You could see how much net profit your business is making. And then you could look at your balance sheet and say, okay, so where is that net profit actually showing up? Are we buying more equipment? Are we buying more inventory? Are we paying off debt? Do we have more cash in the bank? And there's a whole bunch of super nerdy math equations that you can use to figure that out. Guys like me use those math equations every day. But there is a way to kind of mathematically figure out whether or not your business is strong enough to do it. And the reason I mention that is because many entrepreneurs who have never grown before will assume that just because they're busy, because they see money moving through their bank account, that must mean it's a good time to grow. They usually don't have a very good handle on the metrics of their business. They're not really sure if their business is actually making money. And so then when it comes time to grow, they really grow because they misread the busyness signal instead of looking for the market opportunity or the profitability signal, which is what other entrepreneurs who have grown, stumbled, kind of figured their business out, and then got back on their feet. They know to grow when it actually makes sense to grow. When you've got a strong balance sheet that isn't burdened with debt, you have more than 50% of your revenue coming from repeat business instead of new business. And you now have the opportunity maybe to move into another market, segment, or you've identified maybe a little sliver of the market that gives you an opportunity to say, we could go and grow into this marketplace. We're not going to have to take on investors or equity or debt to do that because our company is very strong and off we go. The reason I mentioned debt or equity is because, again, many entrepreneurs who have never been beat up before will think, okay, I know I need cash to open another shop or another facility or to open a new location in a new city. I'm going to borrow to do it. I'm going to take on investors to do it. If you've never done that before, then what you realize is if you don't know how strong your business is to begin with, then taking money from a third party, be it a bank or an investor, or borrowing a lot of or leveraging a lot of your personal assets can end up just putting a lot of strain on the business when it turns out that maybe your growth plan wasn't quite as well thought out as you originally anticipated, and then you hit the skids or something really difficult happens in your business and you're not able to rebound because of it. So how long would you wait before expanding your business? You would wait long enough to know that you've got a strong enough balance sheet that can carry you through a plan that inevitably will never be exactly what you think it's going to be. You always can, you can have the best intentions, you can have the best business plan, but oftentimes because business is so fluid and so dynamic, your plans rarely go according to plan. They are either going to be better than you anticipated, or more likely different, and understand kind of what the actual dynamics are in terms of getting more customers, increasing your overhead, and trying to figure out how do you digest that new growth. So wait until you've got a strong balance sheet, and then off you go. Now, I should note, not every entrepreneur would agree with that. I'm sure many entrepreneurs would say, no, you go, and you put the wheels on the bus as you go. And certainly that's a strategy. But in my opinion, if you want to build a strong business, build your balance sheet, put some cash in the bank, make sure you don't have a lot of leverage. And then when you grow, you can afford to take the bumps that are inevitably going to come. So, see if I can find another question here. How risky is it to start a business with a partner? Well, unfortunately, I happen to have done this many a times, and I can tell you that it's incredibly risky to start a business with a partner. There's no question it's risky. I think it's most risky because at the end of the day, it's very difficult to create a partnership of equals. At the end of the day, there has to be a decision maker. And that's, in my experience, that's why partnerships tend not to work out maybe as they were originally conceived. Not because when times are good, things are going to be hard to get consensus on. It's actually when things don't work out that it becomes very difficult to get consensus on. And I've been personally involved in a situation that took me many, many years to work out of. And I had what I believed was a really well-crafted arrangement and all of our legal paperwork, and there were 4 of us in total. And we just hit the skids because of the market. And I was because I was more comfortable with the risk and the downside and the market and the particular venture that we were in, I was more comfortable with taking a more patient approach to working out of a bad deal. Whereas the other individuals, they hadn't experienced a bad deal before. And so all of a sudden fear kicked in, their nerves were rattled, and ultimately it just became a very impossible deal. And again, it took a long time and a lot of money, a lot of sleepless nights to work out of. And that's simply because the partners all had different points of reference that they came into the opportunity with. They had a different level of understanding of the downside in the deal. And so when the bottom dropped out on the deal, everybody reacted differently. And then what began as a really great partnership ended up becoming just years of pain and misery. And I learned a lot from it. So it's risky to business with a partner. Things are going to get tough when you're making money and things are really great. It's the kind of partner you want in your corner when things go wrong. And are you going to be able to work out of a tough corner? Is somebody going to be able to subordinate to the other person? Or what kind of mechanism are you going to have to make sure that if life doesn't go the way you want, that you can both keep your wits about you, or however many people there are, but that the group or the partners can still function, can still operate, and not lose the opportunity to have an opportunity. In the one deal I just told you about, we lost a lot of money, but we didn't have to lose that much money if everyone, in my opinion, and I'm only one of 4 people, but if we could have kept our wits about us, we could have done a lot better on the deal. And fear's a funny thing. When life is stable and going the way you want, people are pretty easy to get along with. Everyone's chummy, everyone are good pals. But when life gets tough, that's when you really get to see what someone's really made of. And partners and partnerships, that's what makes them tough. It's not the good times, it's the tough times. So how risky is it to start a business with a partner? It's really risky. And not to say risk means you shouldn't do it. It just means, as the word says, risky. You should know what your risks are. And your risks are that if life doesn't work out, you have to have an out. Your partner or your partners have to have an out, and everyone has to have a pretty good idea of what that looks like. And certainly in my experience, I didn't do a very good job of figuring that part of the deal out. And ultimately, just to give you the kind of the ending to that story, I ended up resigning from the board. I gave up my shares in the opportunity, and unfortunately, still got stuck with some of the downside, and it took a it took a while to get rid of. Was happy to see it go, but and happy to have experienced and learned the lessons that came with it, but wouldn't wish it on anyone. So would I get into business with a partner again? Of absolutely 100%. But I would do it with eyes wide open, and I would do it with the assumption that the day after we decide to do the deal, life doesn't work out, and now we have to figure out how to unwind our partnership, or unwind the deal and do it in a more pragmatic way where emotions and fear doesn't end up dictating the outcome. So hopefully you find that a little helpful. Maybe this one's a good one because it kind of fits into the first question that was asked. And I'm just coming up on, let's see here, 12 minutes, 11 minutes. How do I know whether my company is growing or not? I alluded to the fact that, when's a good time to expand your business? It should be when you have a strong balance sheet. One of the ways you know whether or not your company is growing is to kind of see where your cash has gone. I'll give you just an example to illustrate the point. I spent some time with a business, a conglomerate of businesses actually, and they were going through a pretty rough, tough time, needless to say. Their bank facilities had disappeared. The cash was really tight. Anyway, just kind of a really tough situation. But one of the things that the entrepreneur asked me one day after a couple of months of, kind of piecing things back together, he says, like, how do I know if any of this is even working? Like, we've been in the fire for a couple of months now. We're putting out fires every single day, and I can't really tell like what's going on. Like, are we moving the needle? Is something actually happening here? And so what I did is we took his balance sheet, which is, as a quick refresher, balance sheet is like your personal net worth statement. What do you owe? Where are your assets? What do you owe? Like, what are your liabilities? And then what are your retained earnings, or what's the value left over after you deduct or take away your liabilities from your assets? So all we did is we took kind of a 4 month snapshot, and just month over month, we just compared his balance sheet. How much cash did you have in the bank 120 days ago, 90 days ago, 30 days ago? How big were your liabilities 120 days ago, 90 days ago, 60 days ago? And all we did was just compare line item over line item. And what he was able to see is that the profit that the business had been generating, because they were in fact generating profit, it was thin, but it was there. We could kind of see where all that cash ended up going and what difference it was making. And so while his cash balance wasn't, and his line of credit balances weren't really that much different month over month over month, his accounts receivable, his accounts payable and his long-term liabilities were quite a bit different just over that period of time. So how do you know whether or not your company is growing? Look at your balance sheet and see where the movement is. If you just compare your assets on the same day every month, so January 31st, February 28th, March 31st, April 30th, just look at the same liabilities or look at the same assets on your balance sheet and go, which direction is this going? And try to see if you're seeing growth. Are you seeing that you're investing your money back into new equipment? Are you seeing that your accounts payable is decreasing and your accounts receivable is increasing disproportionately? And that will tell you that your business is growing. Conversely, if you look at your balance sheet on the same day over a period of months, and you see that your accounts payable is going up and your accounts receivable is going down, and you see that maybe the balance of cash in your bank account has remained the same or is dropping a little bit, that's usually a pretty quick sign to tell you that your business, in fact, is not growing. Even though you might hear the phones ringing, you might feel like you're always depositing checks and customers are really happy and the staff is super excited and things are going really, really well. But when you look at the math, you go, well, this doesn't make sense. Our balance sheet seems to be getting weaker by virtue of our liabilities increasing and our assets decreasing. Something's got to be wrong. And that should be the first signal that should alert you to the fact that you need maybe to do a deep dive into your business to figure out what's going on. So how do I know whether my company is growing or not? Take a look at your balance sheet and see where the movement is. If your assets are going up and your liabilities are going down, you're in the right direction and you're growing. If your liabilities are going up and your assets are going down, chances are you're not growing. And for entrepreneurs, the tough signal is your staff your customers, your bank account, the sales@sales.com email address is filling up. You've got people inquiring about how to buy your products and services. So it feels like there's a lot going on. But beneath the surface, there might not actually be a lot going on. You might be spending more than you're making. You might have hired more people than you actually need. You might be buying more things for your business than what the business actually requires to do its job. And so the noise and the kind of the rhythm of the business can be terribly misleading. So make sure that you interpret it correctly. So that's it. That's all I've got for you today. That's the end of my questions that entrepreneurs ask episode. So thanks for hanging out. I certainly appreciated a couple of the notes that I got from the podcast, actually, because I turned this into a podcast. And just neat to see that some of you are getting some real value out of this. It is lonely being an entrepreneur, so it's nice sometimes to hear some very practical, tactical advice that might help you and run your business a little better. So thanks for tuning in, and hopefully we catch up with you again next week.